Hi, thanks for watching Follow the Smart Money for November 2025.
Please take a moment to review the disclaimer. Always consult with a financial professional before making investment decisions.
Yeah, I would like to make use of this video to share on some updates that I've done to the weekly Smart Money report. Mainly, I have replaced a page whereby I show the list of stocks that Smart Money are buying for the Singapore, Malaysia, and Hong Kong market. And in place of it, you still get the same list of stocks, but other than just the names of the stock itself, I have provided some additional information, such as the stock price, the current price, which is based on last Friday closing price, dividend yield, the price to earning ratio, price to book ratio, return on equity, debt to equity, and also the 52-week high and 52-week low for that particular stock. The buy list have we have are still the same, just that I remove the list of STI stocks in the sell list and those in the neutral list. And so all the list of stocks that you see here are all the smart money buy list. So just a quick explainer for those who are not too familiar with fundamental or financial ratios. Dividend yield basically just shows that if you were to buy the shares, for example, this Capital Land Integrated Commercial Trust, if you were to buy at this current price of 2.32, the dividend yield that we get will be 4.42% per annum. Of course, this is based on historical yield, meaning what investor had received the past 1 year, and the dividends per share amount divided by the share price, which is 2.32, and then we get this percentage of 4.42. So this is in assumption that if the share price were to remain, or rather if we were to buy at this price at 3.32, and the dividend payout amount remain for the next year, then the percentage of yield that we receive from this investment will be 4.42%. Right. P ratio and PB ratio is just a common valuation ratio that we use to have a gauge on whether the stock is considered expensive or not, right? And many times this has to be taken into context. When we look at PE and PB ratio, we will probably have to compare it to the historical PE and PB ratio of the stock, and also to compare it with its similar companies that are roughly in the same sector, doing the same business. So we can have a comparison to know if the stock is considered highly priced or lowly priced. ROE is more of the performance of the business. So that is that the profit that the company earn divided by the equity of the company. Equity of the company is basically meaning the book value of the company. So a company having a high ROE is more desirable than one with a low ROE. Of course, we cannot simply compare ROE across the board and then just decide to choose the highest, because many times the business that a company is in will also likely determine the type of ROE that that company can achieve. But nevertheless, it's a good information to know. Well, debt to equity ratio is taking the debt the company has divided by the equity, which is the book value. So if the debt to equity ratio is too high, then this company will be in danger of not able to service its debt should the economy start to suffer or its income start to drop. So therefore, many times when we want to invest, also we will want to take a look then to make sure that the debt to equity is in healthy state. So of course, a debt to equity lesser than 1 is much more desirable. And for this ratio, the lower the better, right? But we have to be realistic. Sometimes if a company has zero debt, then it doesn't necessarily mean that the company is great company. It could also mean that the company is not really utilizing leverage in a right way, right? To gain higher profits, right? To help to work the capital for its shareholders. The last two columns, 52-week high and 52 weeks low, is just a gauge for us to see, based on current price, how far it is from the highest price the past 1 year, and how far is it from the lowest price that it has been in the past 1 year. So no particular decision to be made. Doesn't mean that if it's at a high, it's no good. It's at a low, it's good or not, right? So just some additional info to give us an idea where the price is at as compared to its historical price level. Over the next few slides, I'll be going through some smart money charts on certain stocks, and just to share with you how I would go about using charts like this to sift out investing ideas or trading ideas. So just a quick recap over the next few slides that you're going to see. Gray color is the weekly price of the stock. The name of the stock is right on top of the chart. So for this case, this is Genting Singapore. The orange color is the smart money chart for this Genting Singapore. So as the orange line is coming down, is just telling us that the smart money is selling, and you will see that there is some correlation to the share price, the trend in the share price to the direction of the orange line, which is the smart money chart. So as the smart money is selling, the price tends to drop. As the smart money is buying, the price tends to rise. So there are certain way of using the smart money chart. One way is, of course, using technical analysis method, which is the breakout of trend lines. Okay, the green line you see here is by linking the two recent high points of the orange line, which is the smart money chart, and then project it downward. So as the orange line, which is the smart money chart, starts to trade above the trend line, the green color trend line, so this gives us an indication that perhaps there is going to be a change in trend, and the smart money is switching from selling to buying, right? So as we can see here, sometime around July of this year, smart money started buying on the Genting Singapore. So we do see a slight uptick of prices for Genting Singapore since July until now, but not too significantly, right? The share price has broken up above 70 cents and had been hovering between 70 to like maybe 78 cents for the past 3 to 4 months. And but the positive take from this is that even though the share price of Genting Singapore did not rise up too significantly, but we see that from the orange line that the smart money continues to buy. So this is of course a positive indication showing that there could be a possible accumulation of shares, right? So when the smart money has accumulated enough of the shares, then eventually the buying action will push the share price higher, right? So at the bottom of this chart also, I've just shown some fundamental data, which I have, this also available on the first two page of the weekly smart money report, whereby I list out the list of stocks in the smart money buy list. So you can see that this will give us some assurance or some indication that this stock, even though while we are holding on, waiting for its share price to move. It continues to generate 5.3% of dividend yields for the investor. And looking at the price to book ratio of 1, it is also not on the high valuation side. And having a debt to equity of 1 meant that this Jenny Singapore is having no debt at all. Many a time it's good to know what are the catalysts that may potentially drive the business and also the share price of the company higher. So for for the Genting Singapore, we have this news, recent news that the company is engaging in RWS 2.0, whereby they are actively working on expanding the offerings of entertainment and the casinos and also the retail business in the RWS. Next, we take a look at the ST Engineering Smart Money chart. So ST Engineering has been one of the top performer Singapore stocks for 2025, with the share price having exploded by 80% since the start of the year. So, but even as the share price starts to accumulate sideways since June, July until now, but we can see from the orange line that the smart money continue to accumulate, right? The slope of the ascent isn't as big as it was 6 months or 9 months ago, but nevertheless, it is still very much in an uptrend. So the current share price sideways consolidation may be an opportunity for investor for those who are already in to continue to be patient and hold on to the stock. For those who are looking on to add in or add on more position, then certainly whenever there's a certain correction in price, this could be, as long as the smart money continue to buy into the stock, those investors can look for such correction as opportunity to add in more position. For Thai Bev, since the start of the year, the share price has been quite uneventful, coming down slightly and mostly in the sideways manner, trading between 45 cents to 50 cents. So when we look at the smart money chart, the orange line, we can also see that there isn't much buying opportunities, as the smart money has been also moving on a sideways manner. So this has probably changed slightly since late August or early September period, whereby we notice slight upward movement of the smart money chart, indicating that the smart money may be starting to buy into the Thai Bev share. And especially over the past 2 to 3 weeks, we see that the price chart of this Thai Bev had hit some resistance and corrected slightly, but nevertheless, the smart money chart continued to indicate some buying activities. So as of now, there is still some chance to trade these high BEV shares, and possibly this downward correction is an opportunity to add in some position. And as long as the orange line, the smart money continue to buy up, continue to push up higher, then this Thai BEV will continue to be in this buy watch list. Next, we just take a look at the fundamental data on this Thai Bev. So by its P ratio of 11.5 times and the dividend yield of 5.1% is considered on the attractive side historically. And comparing to other blue chips, this this level of price earning ratio and dividend yield is also pretty desirable for investors who are looking at investing on yield. So I've mentioned this before in my analysis on Thai BEV. For those who have read about those WhatsApp messages I sent on Thai BEV before, one of the asset or one of the comparison that we like to make to Thai BEV is by looking at the Thai baht to Sing price movement, because it has shown to have some correlation whenever we see strengthening of the Thai baht is generally positive for Thai BEV share. So of course, other than the fact that Thai BEV is primarily Thai business, so but the fact that is earnings are primarily in Thai baht, and yet the share price is trading in the Singapore exchange in Sing dollar. So as the Thai baht appreciate against Sing, so whatever, even if the company were to earn the same profit as last year, just the very fact that the strengthening of the Thai baht would actually cause the performance improvement in the performance in its financials when we actually look at the compare it to the share price, which is trading in Sing dollars. So the blue line that we see is the price of, or rather the movement of Thai baht to Sing dollars, and we can see that since early 2024, Thai baht has been strengthening against the Sing dollars, and there's some divergence in the performance of Thai baht to that of Thai BEV share price. So if Thai baht were to continue to strengthen, so it would definitely be a positive to the to the price of the Thai BEV shares. Next is the smart money chart on LHN, which is a small or medium-sized stock listed on the SGX. So one way to take note of, or rather to make use of this smart money chart, is to look out for divergence. So like if you look back in somewhere in early this year, so we can see that there's some divergence in the price of the stock to that of the smart money. So between February to early April this year, we can see that there's a correction in price on LHN, and yet during the same period of time, the smart money chart continued to rise, indicating that even as the share price corrects, uh, smart money continue to accumulate on the stock. So that eventually, when you will reach a point in time whereby the price will then reverse and then continue to trade higher as the smart money continue its buying activity. So now we are seeing a little bit of the same pattern. So since early September, the share price of LNH has dropped from close to $1.10 to recent price of close to 70 cents. So, but we can see that even as the share price start to drop further, um, the smart money chart did not drop further since early October. So this could be indicative. Maybe it's still early time, but this could be indicative that perhaps at this point in time, we're going to start to see some accumulation. So this by itself is not a definite buy signal, but it is definitely worth keeping a watch on this stock. Lastly, one common signal that I take from the smart money chart is the breaking out of important resistance and support levels. So this is a smart money chart on UMS, and we can see that the recent week movement of the smart money chart, the orange line has broken above important resistance level, so thereby giving us a buy signal on this UMS. Lastly, just a quick sharing of the performance of this global growth leader managed account service that Philip has been promoting. So I have also been sharing this service to many of you. So this is the snapshot of his fact sheet as of 30th of end 30th of September this year. So since inception, this investment has returned annualized 17.8% for its investor, and year to date, it has returned about 10.7% to its investors as well. So the black line that you see here is the equity curve of the portfolio, and it started off with 1, which is the inception point, and then after initial correction, um, generally this portfolio has been on an uptrend, and then of course whenever the market corrects, you will see the equity curve will correct as well. But then overall the performance is considered desirable as the correction is not deep, and many a times the continuation of the equity to the upside is on a faster ascent than its correction phase. Right. So the focus of this fund is to invest into global stocks, and the minimum investment is 25,000. Next is a snapshot of my own investment into this global growth leader. So I started investing into this portfolio since late November last year, 2024. Started off with an initial capital of 50,000 Sing. So to date, the 50,000 Sing has grown to 55,700 plus. So thereby chalking return of almost annualized return, because now it's November already, almost annualized return of 11.4%. And I think just to know that this 11.4% is net of the management fee. Yeah. Of course, for this product, apart from a management fee, there's also a performance fee. So, whereby, I mean, if you want to find out more, you can reach out to me, and I will share with you how this the fee structure work for this product. So, for those who have not signed up for any of my WhatsApp broadcast services, shown here is the list of WhatsApp services that I provide for my clients free of charge. Do let me know if you would like to register for any of them.
Thank you for taking time to watch this video. Please click the like button if you like the work I've done. Until next time, wishing you live long and prosper.